Grayscale GBTC discount falls to 16% as markets bet on Bitcoin ETF approval. Some analysts say GBTC's discount is narrowing because investors are pricing in the SEC's approval on several pending spot Bitcoin ETF applications. Grayscale's Bitcoin BTC tickers down $27,952. Investment vehicle, Grayscale Bitcoin Trust, GBTC, is trading at its lowest discount in nearly 2 years as spot Bitcoin exchange-traded funds, ETFs, continue to inch toward potential approval in the United States. The latest data from YCharts shows GBTC's discount to Bitcoin's net asset value, NAV, has narrowed to 15.87% as of October 13. Discount to NAV is a percentage that measures the amount that a mutual fund or ETF is trading below its net asset value. The metric is used to track how far away a security is trading from its true value. Data shows that GBTC's discount began to narrow when BlackRock and several other financial institutions filed spot Bitcoin ETF applications in mid-June, where the discount fell from 44% on June 15 to 26.7% by July 5. Since then, the figure has continued to narrow. GBTC's discount to NAV chart over the last 12 months. Source: YCharts. The last time GBTC's discount was at a similar level was in early December 2021, only a month after BTC hit its all-time high price of $69,000 on November 10, according to CoinGecko. Bitcoin advocate Oliver Velez believes the market is pricing in spot Bitcoin ETF approval by year's end. Other analysts, such as cryptocurrency investor Lyle Pratt, believe GBTC's discount will continue to evaporate over the next week or two as spot Bitcoin ETFs near approval. The GBTC discount has narrowed to 16% as the market bets on a Bitcoin spot ETF approval. Grayscale's Bitcoin Trust, commonly known as GBTC, has experienced notable changes in its market dynamics. At the start of this year, GBTC was trading at a significant discount of 48.31% compared to its net asset value, NAV. Fast forward to today, and that discount has considerably narrowed to 16.59%. NAV in the context of GBTC serves as a financial metric, representing the per-share value of the underlying Bitcoin the trust holds, adjusted for liabilities and divided by the number of outstanding shares. The narrowing of the discount between the market price and NAV could be indicative of shifting market sentiment and potentially increased demand for GBTC shares. In layman's terms, the discount or premium on GBTC can serve as a proxy for market perception and investor sentiment surrounding the trust. In the past, particularly from the end of February 2021, GBTC had been trading at a discount to its NAV, meaning investors were able to gain exposure to Bitcoin at a price lower than the actual value of the underlying asset. One significant feature of GBTC is that it doesn't offer a straightforward mechanism for redeeming shares for actual Bitcoin, and it trades over the counter, OTC. This structural element can lead to instances where its market price deviates from the underlying BTC value. Factors like market speculation, investor sentiment, liquidity constraints, and even regulatory news can influence this price divergence. The earlier 48.31% discount in January 2023 essentially meant that GBTC shares were trading far below the Bitcoin they represented, presenting what some investors saw as a bargain opportunity. The reduction of this discount to 16.59% may imply a more optimistic market view on GBTC, but it's worth noting that there is no guarantee that the discount will continue to narrow or even flip to a premium. Amid these dynamics, Grayscale is pushing hard to transform GBTC into a Bitcoin exchange-traded fund, ETF. This regulatory initiative has gotten a slight push